Welcome to Friday Takeaway. This week it is the manufacturers, DNO and Genetech, that hold our interest, but we have to talk about... I know it sounds like deja vu, but this week saw a sharp escalation of that trade war between the US and China, with the US imposing a 10% tariff later this month on US $200 billion worth of goods, which will go up to 25%, that's the tariff, by the end of this year. So if you actually take that all together, it means that almost half of the products that China sells to the US would be hit by tariffs. China, of course, not taking this lying down, and announced that it would also put tariffs on $60 billion worth of US goods. Now, most analysts say this trade war will just get worse and it will hurt global growth. Another casualty was Jack Ma, founder and chairman of Alibaba, who has now said that the company will no longer create the 1 million jobs in the US it had promised earlier. In his own words, he said that the promise was made on this premise of friendly relations between the US and China, and that doesn't exist anymore. The KLCI was not spared a knee-jerk reaction on Wednesday to the news when it saw a 10.82-point drop, but it did manage to recover, tailing Wall Street's massive gains. And overall, it was up over the 1,800-point mark, but analysts warn the market will still be choppy. Speaking of rough, ex-PM Dato Sri Najib Razak was arrested again on Wednesday. Now he faces 25 fresh charges over an alleged 2.6 billion ringgit deposited into his personal account, of course linked to 1MDB. 4 of those charges are under the MACC Act, the remaining 21 are under Anti-Money Laundering and Anti-Terrorism Financing Act. He has, of course, pleaded not guilty, and the court has granted him a bail of 3.5 million ringgit. He says this is a chance for him to prove his innocence and that he's not a thief. Also, major changes at FGV as its president and group CEO, Datuk Zakaria Arshad, resigned after being put on suspension because it was announced that he was no longer MOF Inc.'s nominee. But if you want to see a bright side to this, some said the resignation was somewhat positive so that FGV can actually move forward. This week we are looking at manufacturing, and in particular, 2 stocks saw some positive movement. First is DNO Green Technologies, which was one of the most actively traded stocks this week, which begs the question, what exactly is pushing it? Another mover was Genetech, which saw some positive technical push, even though it had a deal in India fall through a few weeks back. So let's batter up. DNO, when they first started, were in the biz of manufacturing semicon components and machineries, which they still do, but these days that specifically is for light-emitting diodes, or LEDs to the common parlance. And its global network includes China, US, Japan, Europe, Korea and India. It had been a very good second quarter for DNO. Net profit actually grew 120% almost to 8.1 million ringgit. Kenanga, in a research report, said that the group is on track to deliver record earnings post a visit that they had with management. So some of the positive takeaways they said were much stronger margins, even though this is post a portfolio transformation where automotive now contributes more than 95% of total sales. Other positives were new products like smart RGB LEDs, which Kenanga said could have average selling prices of 3 to 4 times higher than existing interior LEDs. Overall though, their 5-year expansion plan is also on track, which would also help to boost capacity by 25 to 30%. The ongoing US-China trade war is expected to actually not only get worse, as we said, but also have an impact on global trade, the depth of which depends on who you ask. Overall though, the whole furor is a white dampener on the whole semicon supply chain in general, but DNO said it was actually a blessing in disguise as it saw more orders from China. But a bigger risk is actually any kind of wild currency fluctuation, such as a softer USD MYR, which could impact margins if the changes are way too steep. The stock was one of the most actively traded on Bursa over the past few days, closing at a historical high of 81.5 cents on Thursday. But today there was some softness as it couldn't seem to really hold on. But overall, if you're taking a very long-term view, the average has been around 67 cents. 2 analysts cover the stock, namely Kenanga and MIDF. Both are positive on DNO, and if you take into account both target prices, 85 cents for Kenanga, 88 cents for MIDF, there is still some upside. Listed in 2004, Genetech's business is the designing and building of factory automation equipment, all the way from design to prototype to replication. Among the industries it serves include automotive, HDD, semicon and electronics, plus others. Genetech actually saw a positive uptick in its shares, which according to reports was due to positive technical outlook. Public IB research said the stock was riding on an uptrend, and that if it manages to break above the 1.82 ringgit resistance level, price may actually go higher, where the next resistance level after that is 1.94 ringgit. So for the first quarter FY19 for them, net profit actually grew year on year by 89% to 3.7 million ringgit. A substantial big leap that was driven, according to Genetech, and this is very important because it's the one that you need to look at, is fundamentally, namely better sales volume and improved operation efficiency. Top line grew just over 15% to almost 29 million ringgit. However, Genetech did face a speed bump a few weeks ago when it announced that it would not proceed with this planned collab with several parties to develop an ammonia and urea manufacturing plant in India because it could not ascertain the technical feasibility and economic viability of the project, which leaves a big question as to what is the next big catalyst. Over the past year, the average trade at the counter has been around the 1 ringgit 30 cent mark. It is definitely better though than it was 6 months ago when the stock was around that average.